What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and the trading method that we use can be implemented when trading any company that's publicly traded in the U.S. stock market. Make sure you hit the like button if you enjoy this video. It really helps the channel grow. But also make sure you hit the subscribe and notification bells buttons. That way you are notified when we release new videos. We do release the videos Monday through Thursday and once on the weekend, but from time to time we'll release bonus content as well. The nightly and weekend videos, like tonight's video, we focus on the triggers and the targets that we set up for trades ranging from scalps and intraday trades to long-term swings as well. So if you want a deeper dive into exactly how we set up our charts, then look at the bonus content on our YouTube page. It gives you a little breakdown on the color coding that we use for the different time frames, broadening formations, things like that. And if you want more information about the strat, which is the base of our charting method, then there's free information in the description of this video. But I do encourage you to watch the full video because along with the triggers and targets, we do give some pretty good insight into the price action on all time frames. So make sure you stay tuned, right? Let's go ahead and look at today's intraday's price action. And we have recognized a comment out there that they try and watch us every day, but they watch on a phone and it's hard to see the levels a lot of times. So I'm going to try and take that into account and try and make charts a little bit bigger. It's a little bit harder on things like the 5 minutes, so I will zoom in on the higher time frames where it's a little bit easier. That way you can see those levels a little bit better. But I did hear you, and I will try to accommodate everyone here that might be watching on the phone. So just from a wide view on the 5 minute, starting out from the scalping perspective, I just want to call out some of the important levels. Of course, the 4-hour markers, we have previous high of day at 40.81. We've got overnight high at 38.87, which also ties into the 50% of last week. We've got the overnight low at 36.92, and we've got the previous low of day here at 35.97. We also have the last week's high at 41.93. And we got the opening print here today at 37.69. So we did open and just basically shot up from the beginning. So trying to make things a little bit bigger here. Even on the 5 minute time frame, even on the 1 minute time frame, there was no higher low to get in here. You just either had to get in blind from the open, or you would have to already been in swings, right? So we did get the push up now around this 50% of last week, this purple dashed line at 38.94. We did get a higher low on the 1 minute, so you could have entered there and got the push that continued to go up. Now, if you're waiting for something on the 5 minute, here's your higher low to get in. If you're not familiar with the channel, one of the rules of our scalping and repeatable trading method, especially for the morning, is getting our opening print and having the 4-hour markers that we called out earlier. But once we have the opening print, we're looking for higher lows above or at opening print to get into calls, and we're looking for lower highs at or below opening print to get into puts. So you can see this morning we got the higher low above opening print. It was once we get the higher low, the targets are overnight high and previous high a day. That this higher low was over overnight high as well, so that target's basically out the window. So from a scalping perspective, our target is previous high of day, and then if you wanted to let them run past that, depending on when your expiration date may be or whatever your risk profile may be, if you wanted to let them run past that, then you'd look at the 4-hour and 1 day chart triggers and targets that we went over last night in our last night's video. We'll go over the ones for tomorrow when we get into our notes here. But we can see we got the higher low, we got the push up, basically the previous high of day, and then you continue to move sideways for a little while, playing with previous high of day basically. And just trying to keep things big. We did finally get price above previous high of day, and that did turn from resistance into support here a couple of times. Stayed up, got to the week flip right here. Week flip is 41.16. So we were below 41.16 this morning. That meant, the week was red. So we were able to flip, not only get support off previous high a day, but flip the week back to green. So that puts us back in full time frame continuity from the week up, right? The week, the month, the quarter, and the year are green at that point. And basically played with that week flip through the end of the day. Closed just barely above it, but you can see this purple solid line that's going diagonally up to the right. That is a weekly broadening formation. So again, we talked about last night and in previous days that the levels around the weekly broadening formation, the week flip, those levels were going to be levels of resistance on the way up. Didn't mean that we were going to be rejected at those levels, but we just knew that there was going to be a fight over price at that point. And you can see, just choppy action once we were at the week flip and just under the weekly broadening formation. So that's good. That's good. That's enough on the scalping chart. Let's take a look at just the 4-hour chart real quick so we can look at things a little bit bigger. Oh, actually, I want to also bring into call that when we did get the push up this morning, aside from that one on the the higher low on the 1 minute before you got the higher low on the 5 minute. If we look at the 15, this is the first candle of the day. You got this was your lower high in comparison to this high, and this but then turned into a higher low when it turned into a green 3 candle, right? It started out 2 down. It pushed, we opened down, so that was already 2 down. It pushed down a little bit, but created that wick and bounced back up. Now that created a higher low at that point. So you've got the start to an uptrend if you get a higher high. So once this pushed back into this candle and pushed above this high that we ended with yesterday, this became a higher low, and we were already making a higher high. So from 15-minute perspective, you broke with the higher low, higher high, and also on the 1 hour perspective, you broke with that as well. So a simultaneous break right here was the first 1 hour candle of today. And you can see that we had let me make this a little bit bigger. You can see this was yesterday's price action, the push up at the end of the day. We ended with this lower high because we opened up below it, so that locked that in as a lower high, and this became the start of a push down, but then it reversed, and once it got back above the high of the last 1 hour candle of yesterday, that locked this in as a higher low, a soft higher low, but still a higher low. And once price was above the 2, that locks, we're obviously pushing to a higher high. So higher low, higher high, that's the start of an uptrend. So I don't know that anybody would have predicted that we would have got this straight up for an hour, but that would have at least been the trigger, and then you would have been in the game early before the higher low on the 1 minute at the 50% of last week, right? So that could have been your early entry today as well. Let's look at the day chart. And we can see, again, we're fighting with this higher low line that I drew, this orange dashed line, right? We did make the higher low here, but it was after we made the higher low, we made a higher high, and then after we made the lower high here, we made a higher low here, and then a higher high. So it kind of negated the downtrend that was possibly starting. But I do like to kind of keep in mind where that is, especially if it's crossing over a broadening formation. So it's just more of a reminder that we're going to get more, again, more of a fight around this price level, right, to get that push to the upside. Doesn't mean we have to reject, but we could just move sideways. So again, we're kind of fighting with that level here. It's in sync with the weekly broadening formation with the week flip. You see how it crosses over here. So expected a battle once we got to this level today. But from the day perspective, we do want to remember that back in July, we had that early June through July, August, we had that 11-week range or sideways action from 24 to 28, where we just kept bouncing 24 to 28 for 11 weeks. And you can see how that same type of thing might be starting here, right? If we get slightly more of a push up tomorrow and we don't push up through this level, or if we get a wick and we push back down, just sideways action possibly tomorrow. If we get that, this could be being established as the top of the zone. And then if we get the push down, then and we get another bounce around this level, then obviously this is being established as the lower part of the zone. So a little bit more to work with than the 24 to 28 range back in that 11-week sideways action. This one's what, about 35.50 to 42.50, so like $7 to play with up and down. So you can do things like sell calls at the top, buy puts at the top once we're at the bottom and we get the reversal trigger at the bottom. You can buy calls, aiming for the top of the range again. But we need to look at possibly turning into range traders at this time instead of trend traders, because it does look like, we have been in sideways action for a little while now, since early October. What's this, 10.3? We had this price action 10.2. So beginning of October through now. So basically, 15 trading days where we've been going sideways. So, that's kind of being established as the range here. So we want to watch what happens as we get to the top of this range. Again, we're playing with this weekly broadening formation. So don't expect, maybe we get the gap up, and that's how we clear the weekly broadening formation. But again, we've got this 100% fib extension of the bull flag from the bottom of April to the top of July, right? So we still got a lot of resistance that we're looking at, still well below the market maker's expected move high. If you're not familiar with the expected move, market maker's expected move, take a look at our weekend video where we dive deeper into that. But even above that, we've got another weekly broadening formation, daily broadening formation, and last year's 50%. So expect a battle up through these levels, even if we continue to push up, right? We do have that gap up there above, around 50. So that could be a magnet to suck us up there. But we just want to keep in mind that looks like we're ranging. We've got plenty of support below. We talked about, let's just go to the week chart now. So we kind of dragging this video on. Let's speed things up a bit. But we can see on the week, we're bumping up against that, weekly broadening formation that we've been talking about, and came as basically as close as you can to being a bearish engulfing candle. If we close the low yesterday was 2 cents above last week's low. So if we would have gone just 2-3 cents lower, we would have been a bearish engulfing candle at that point. Now if price reversed back up today and we went back to where we did today, then obviously it flips the week green and we would have a bullish engulfing candle at that point. But you can see from the inside candle to this almost 3 candle, it's indecision, right? This is tight indecision, this is looser indecision, this is just expanding the range. Especially if this is a 3, that's really all the 3 is expansion of range. So like we've been talking about for a while, just sideways action, but nothing's breaking down, right? If we look at things, I'm going to have to scrunch the chart down just a little bit so we can get a wider view. If we look at things, we're still in this uptrend. Here's that April 7th low, here's that July high, the 11-week sideways action forming the flag, and then you can see obviously we've got this fib extension here. It probably doesn't light up too much for you guys on your phone, but let's see if I can make that different color. There we go. So we can see there we have our fib extensions of that move, right? If I change this as well, change both of these. There we go. So if I change those, you can see here's the flag pull, here's the flag, and then we have the bounce. So that 100% fib extension, we've basically met it twice. So in conjunction with that weekly broadening formation, we could expect more downside action. And again, we've got all this room to put in a higher low. As long as we're above that 23.50, we're going to put in a higher low. Now, after the higher low, we've got to watch out for a lower high, showing trend reversal. But at this point, we've still got a lot of room to put in a higher low with plenty of support below that. So actually, let me change this back just because it makes it a little bit easier to read during the day. But let's go ahead and look at the month now, and we're easily back in that 2 up in force. We pulled back yesterday, closing just above last month's high, but we've pushed back up, very high, or not very high, but handily above last month's high. So we're still looking at the 2 up, trying to get to last year's 50% line in that gap close. Not in any real strat reversal, just in this two up continuation. But if we look at things from the quarter perspective, again, I'll try and make things bigger. From the quarter perspective, we are in this one combo two down, combo two up. The trigger of that strat reversal was the high of this two down candle right here, this 36.15. So as long as price is above 36.15, we're still in force with the one combo two down, two up, and the magnitude for that move is 70.08, which is last year's high. It's the candle to the left of the one in the strat combo. So got a lot of ways to go to reach that magnitude. Again, we're not going to reach it just in this quarter. It's probably going to take us a couple of quarters, 3, 4, maybe even, depending on this market is, again, so headline sensitive, rate sensitive as well. So we just got to continue to play things and just know that as long as we're above that 36.15, everything is all right. And on the year, we talked about how we took what looked like a bleak situation at the beginning of the year with the one on 2023, the inside candle, the failed two up last year, and then the two down, triggering the 1, 2 up, 2 down on the year. We did get that pushed down to 723. 621 was the magnitude. So we are looking at a higher low on the year perspective, a green hammer wanting to continue to close at the high of this candle, giving us the better chance of going two up next year, target or with the magnitude of 70.08 with the two down, two up reversal. All right, so let's go back to, I'm going to just go to a 15-minute chart and bring up the swing chart. And we'll talk about the market maker's expected move for this, for Friday, October 24th. Try and make this bigger here so everybody can see. I don't know what I can do about the numbers on the side of the chart. I mean, those are what they are, but hopefully you can see the levels that I've got marked out on the chart, and we can see that market maker's expected move high is 43.46, and the market maker's expected move low is 38.88 for tomorrow, Friday, October 24th. And the way that we get this, we go to we're just on Thinkorswim. If we go to the options chain for this week, October 24th, 2025. We can see over here on the right in the parentheses, we've got a plus or minus 2.284. So that was, might have changed 1 cent since we looked at it. 2.29. Yeah, it changed 1/100th of a penny. But anyways, of a dollar, so a cent. So anyways, $2.28, $2.29 plus or minus is the market maker's expected move for tomorrow. So, we've got that here in our notes. So Friday, October 24th, 45 trading days left in the year. The previous close, or Thursday's close, was 41.17. So if we add 229 to it, we get 43.46. We subtract 229 from 41.17, we get 38.18, giving us a range of 43.46 to 38.88 for the market maker's expected move. And again, we've got that marked out here on our charts with these orange dash lines right here. This one is in line with last week's 50% line. So again, it just over and over, basically every day, it seems like, at least for the last 2 weeks, because of the indecision that's been going on, it shows how important knowing where last week's 50% line was, right? So with that in mind, we know that not a whole lot of action is expected tomorrow compared to what SOXL can do. I mean, I guess it is. Today was what, $2.78, so about 50 cents less than what today's move was. So whether we get it all in the morning and just do the slow grind up again through the end of the day like we did today, or if we get it all and just go sideways or push up and get a pull back, who knows? But it's not an official level where we're going to say, oh yeah, price is going to reject here, but it is a level of note, and we'll have that in our notes so that we know when we get to that level, there is a possibility of, if not a rejection, sideways action. All right, so that's enough of that. Let's get into our 4-hour markers and the triggers and targets for tomorrow. And actually, we'll talk about this scalp one more time real quick for everyone who's not familiar with this channel. Just go down to the 5-minute. So we have our 4-hour markers on the chart. Oops, we can get the chart to work for us. We've got previous high a day at 41.47, previous low a day down here at 37.55. And as of right now, we've got overnight low right in here. Where's our overnight high? an overnight high up there. So I'll just have to make this chart a little bit smaller. All right, to try and keep all of those in focus. So basically what we've got is, say price opens up here tomorrow at 40.49. We get a push up, hit previous high a day, and we get a pullback. If we get a higher low above opening print, we want to get into calls, and we want to target previous high a day first, and then overnight high is our second target. Those are for scalps. Now, look, keep in mind, we've got two weekly broadening formations right here, 15-minute broadening formation. I'm sorry, not two weekly, but last week's high, a weekly broadening formation and a 15-minute broadening formation. So, expect a little bit of choppy action in this level if we don't just gap up over it overnight and open up above that level. But just keep that in mind. Now, to the downside, if we open up and we had a push down, maybe a bounce off of this 15-minute broadening formation, or overnight low, we get a bounce and we push back up. If we get a lower high underneath the opening print, we want to go ahead and get into puts, and we want to target overnight low first and then previous low a day. All right, so that's the repeatable strategy. It's real simple. Just higher lows above opening print, get into calls. Lower highs below opening print, get into puts. All right. So looking at more of an intraday play tomorrow, looking at the 4-hour chart, trying to make this big enough for everyone here. We see what the range is that we've been in for the last 3 weeks, right? We've got our market makers expected move high up here. We've got the market makers expected move here at, right at last week's 50% line. You can see where last week's high, last week's 50%, last week's low are here on the chart, and we've got this weekly broadening formation. So those are the major levels that we need to be worried about when we're looking at something higher than a scalp. If we do get action to the downside, that would give us a 2 up, 2 down, not triggering at the low of this 2. Now the magnitude for that move is the low of the first 4-hour candle of yesterday. I'm sorry, of Thursday. So that would be 37.55. So that's a very decent move. Now you'd have to watch for support here, last week's 50%, which is also the market maker's expected move low. But the magnitude for that move would be to the low of this candle, the first 4-hour candle of Thursday. That would technically be a lower high on the 4-hour as well. So that could be the start of a downtrend, or it really would be, because that's after a lower low. So, at that point, how much support is last week's 50% going to be? How much support is market maker's expected low going to be? We could just, that's the week flipping back red again. We could go crashing through that level to reach the magnitude of that move, and then possibly go further to test last week's low. But that'd be a pretty drastic move. But I mean, we saw something almost just like that on Wednesday. So just something to keep in mind. Now, if we go to the upside, we're going 2 up continuation. So very clear entry, but not the most clear exit. We could say that it gives us a sloppy. Let me just make this a little bit bigger so everyone can see. We could say it gives us a sloppy 1 combo 2 down, combo 2 up. If that does go above the high of the second 4-hour candle of Thursday, then we're targeting not the high of the 1, but the candle to the left of the 1. So 42.03 would be our first target. And then you could say it's triggering another sloppy 1 combo 2 down, combo 2 up. And that would target the high of the 2 up here at 43.04. That would put us above last week's high, put us above the weekly broadening formation, and put almost square up against the market maker's expected move high. So not too much to expect that type of move tomorrow to the upside if we get it. Let's go to the day chart, and let me bring up a little bit cleaner chart here. There we go. So again, just looking at pure candle structure, we did get a lower low, but it was a very solid green candle, a 2 up candle. So not a whole lot that you can say bearish about this candle, just again the candle itself. But we are in jeopardy of producing a lower high if we close, or if we get if a lower high gets locked in below this level, right? Because we're coming from a lower low. So that could be the start of a downtrend, the start of a trend reversal. Now, we keep in mind the range that we're in, and we want to keep in mind that we want to watch how price reacts. If we do get back down to this level, do we get a reversal back up, just showing that this is a range, or are we going to get that further push to the downside, right? We've got a couple of gaps down here. It's the week and month flip are right here as well. So if we go below 34.17, the week and month flip red, and that could give the bears a little bit more momentum to go to the downside and close some of these gaps. This other gap here at 28, 27, it's right underneath the year flip as well. So it's not that hard for the year to flip back full time frame continuity to the downside if we get a good push to the downside. So just keep that in mind, right? But the bulls, worst case scenario, this is a range that we're getting in. Best case scenario, it's a flag, and we're getting ready to pop out of it. Let's just go back to the notes and just look at the hard numbers for a second. So again, we know where gaps above and gaps below are. We talked about higher lows at or above opening print getting into calls for scalps, or lower highs at or below opening print getting into puts for scalps. Intraday on the 4-hour chart, if you see a 2 up, 2 down trigger at 40.75, so if price goes below 40.75 in that first 4-hour candle tomorrow, we've got intermediate targets of 39.85 and 38.94, just because the move is a pretty big move, but the ultimate magnitude for that 2 up, 2 down reversal is 37.75. So that's what we have to the downside on more of a day trade perspective, 4-hour chart. If we do get price to the upside, we get that 2 up continuation, which we talked about is kind of a sloppy one combo 2 down, combo 2 up, but that triggers the 2 up triggers at 41.47. If we're looking at the one combo 2 down, combo 2 up being a strat reversal there, that magnitude is 42.03, and then that other sloppy one combo 2 down, combo 2 up, that magnitude is 43.04. So those are your levels for the longer day trade. Not the scalp, but more of a day trade, possibly even swing perspective if you want to play the 4-hour like that, especially if we make a higher high on the 4-hour perspective. But then from the day chart, if we go to the downside, 2 up, 2 down triggers at 37.55 with the magnitude of 35.97, and we've got an extended target of 34.78 when we're looking at the day chart. That's the downside. To the upside, when we would get if price goes above 41.47, that triggers a 2 down, combo 2 up. That 41.47 trigger has a magnitude of 42.03. That's again that magnitude of that sloppy one combo 2 down, combo 2 up on the 4-hour chart, and then the extended target of 43.04, which is that extended target for the 4-hour as well. I don't know that we would go too much higher. If we want to swing back to the charts real quick, we do have that 43.80, which is the that 100% fib extension of the bull flag, so that could be another target out there as well. On the week, we just look at how, again, we almost triggered that red 3, or the bearish engulfing candle. 35.95 is what it took. We bounced at 35.97, and we're back in that 2-1-2 up. 41.93 is the trigger, so we're not in force, but the candle is back green right now, even if it is a doji. And again, the magnitude of the 2-1-2 up is 43.37, which is last week's high. So that's another extended target that we could have in between that 43.04 and 43.80 on the day, if the day really starts pushing like that. Extended target, if tomorrow just breaks out for some reason, 45.67. I don't think that we would make it there, but hey, you never know. And then the month, quarter, year, we won't go back to the charts. We already looked at those earlier. We're still in the 2 up in force. That's why it's in bold. We're above that 35.49 trigger. We hit that first target, and we're looking for our second target at 43.80, which is just above that magnitude of the week 2-1-2 up continuation pattern. On the quarter, we talked about how we fulfilled the 2 down, combo 2 up, triggering at 35.49, magnitude 36.15, which then triggered the 1 combo 2 down, combo 2 up. And as long as we're above that 36.15, ultimate magnitude is 70.08. But we do have these intermediate targets here, and then once price gets even above 50, then we'll have some more extended targets before we get to that 70.08. Then on the year, we talked about we turned around the 1 2 down, 2 up. We got the green hammer, and just looking to finish as solidly, as bullishly as we can into the end of the year, so we have a good chance of triggering the 2 down, 2 up on the year in 2026. That magnitude is 70.08 as well, so we'd be looking for that to be our ultimate target next year. But that's where we've got for our triggers and targets from, scalping perspective all the way up through the year chart. Thanks for watching. If you like the video, give it a thumbs up. It really helps the channel grow. Like we said, we appreciate everyone that continues to watch. Even if it's on your phone and it's a little bit harder for you to make out the levels, we apologize for that, and we hope that we are making the situation a little bit better for you. We do really appreciate everyone that continues to tune in, giving us thumbs up and leaving comments. It really helps validate what we're doing and that we're doing it for the right reasons, right? We like the fact that we're able to help someone with some knowledge that we have, some information that we have access to, and if it can make someone a better trader, that's what we're here for. So I hope everyone gets some rest tonight. If you're watching this Thursday night, if you're watching this Friday morning, I hope you got some good rest last night. Wake up refreshed, ready to trade, and I look forward to trading out there with you.